With the deadline looming, it appears Congress has got a deal in the works on the fiscal cliff. I'm Theo Keith with its impact on you and those who drive our economy.
And good evening. Happy New Year to you. I'm Eric Franke. Sarah has the night off. First tonight at 10, a deal has been reached, but the House has no plans to vote tonight. We have continuing coverage of the fiscal cliff as we get ready to potentially fall over it. Just a little bit ago, Senate Republicans met with Minority Leader Mitch McConnell to learn more about the tentative compromise reached with Vice President Joe Biden. The last-second haggling was over spending cuts. The impasse has frustrated both sides, and some lawmakers were angry about the suggestion to deal with cuts later.
This is the mini cliff. Big cliff still lies in front of us. The big cliff is all the spending cuts.
One thing we can count on with respect to this Congress is that if there's even 1 second left before you have to do what you're supposed to do, they will use that last second.
I don't love it, but I think it is a very good job of negotiating where there are some wins and some losses.
Well, House members are due back at noon tomorrow, and we want to explain how the fiscal cliff negotiations will affect your taxes. New at 10, the 19th Theo Keith breaks down who benefits and who doesn't as the deal stands now.
At Candina's Chocolatier in Madison, ringing in the new year tastes a little sweeter.
For 18 years now, we've been making the champagne truffle.
For Marcus Candinas, this is always the busy season. But when you're selling a box of chocolates in this economy, you never know what you're going to get.
We're part of this country. We're not an island here. We're part of it. I think it is one of those things you can tell that people's confidence maybe isn't quite all the way there.
Candina says it's not whether taxes go up or down, but the uncertainty that's killing confidence. Without a deal, taxes go up on everyone. With one, it depends on how much you make. Monday's compromise would permanently raise taxes on the highest earners from 35% to 39.6%. But for lower income people and middle income people, there's good news. For starters, there's a one-year extension to unemployment benefits that thousands of Wisconsinites are already starting to see run out. Then there's a 5-year extension to 2 tax credits. One of them is called the American Opportunity Tax Credit. It gives a break to families making less than $160,000 a year. The break comes in the form of $2,500 per college student annually. The other one is called the Earned Income Tax Credit. That gives cash to families who don't even make enough to pay income taxes in the form of $475 to nearly $5,900, depending on how many children you have and how much money you make. Of course, all of this depends on whether lawmakers can reach a deal on other things, and soon.
I really want them to work together and not apart, and that's my frustration for the whole thing.
You're just much more cautious about how you spend your money, and yeah, you don't spend as much.
I don't think there's going to be any impact on the middle class except for a couple issues.
Tax professional Marshall Menenga says the biggest one is an end to the payroll tax holiday. Extending it doesn't look likely, and without it, we'd all see 2% less on our paychecks in the new year.
That is going to happen. I don't think there's any doubt about that.
Chocolate is the most prevalent flavor.
At his chocolate shop, Candinas has a sweet suggestion for Congress.
So maybe just locking them in a room with a box of chocolates and not letting them out until they figure it out would probably be a good way of doing it.
If you like chocolates a lot, that's probably a good suggestion. Meninga says all of this on confidence has one benefit, though. Instead of spending money, we might pay off debt or save a little. That doesn't help the economy, of course, but it does get all of us on better financial footing going forward, Eric.
All right, Theo, thank you very much. Yeah.